All right, what's going on, y'all? In today's video, I'm gonna be helping y'all understand candlesticks and how to read candlesticks on the chart. So let's start with what are candlesticks. A candlestick is a visual representation of what happened during a particular time period. So for example, you could have a 1 minute candle, a day candle, a week candle, you can have an hour candle, whatever time frame you pick, that's what that candlestick could be. So here we have a chart and it shows candlesticks. Now, my candlesticks are blue and black, so my blue is actually green and my black is actually red. I just changed mine around because that's what I prefer, but it's the same thing. So you can see I'm on a 5 minute time frame. So each one of these candles, this candle, this candle, this candle, each one of these candles are 5 minutes. All of these candles are 5 minutes. So if I switch it to the 1 hour time frame, these candlesticks are now going to be 1 hour, right? So you see in this day, it's not as many candles as it was on the 5 minute chart because each candle is only 1 hour. So you can look at different time frames and see the candlesticks on a different scale if you switch your time frame. This is a day. You can see we can go all the way back to April and it's way less candlesticks than it is on the 5 minute chart. That's because each one of these candlesticks are a day. All right, so let's talk about the information that a candlestick can give you. It can give you the opening price, it can give you the highest price of that candle, and it can give you the lowest price of that candle. All right, guys, so back on our charts, let's go to a bigger time frame. Let's go to the 4 hour. So each one of these candles are 4 hours. All right, so let's look at some examples on the 4 hour. So we have a wick going up and we have a wick going down. So price opened down here and it closed above where price opened. So that's showing me a bullish candle. Remember, bullish candles are going to they're going to close higher than what they open. And it's reverse for bearish. They're going to close lower than what they open. So on this candle, we opened at 184.32. Boom. Oops. 184.32, which is where this candle closed. So the next candle opened 184.32, and we ended up closing at, what do we close at? 186.68. Which is right. I don't know if I'll be able to get it perfect. Whatever, same thing. And I can tell if you look at the top of my screen right here, I don't know if I can circle it, that this shows me what the candle did, if you didn't know that. So the high of this candle was 187.99. So at some point on this 4 hour, in this 4 hour span of this candle, it got all the way up to 187.99. But it didn't close there, it just got to that high. And it also got as low as 183.74. So wicks can be important because they can show you what price wants to do. They can create support and resistance as far as the wicks. So if we go to this 5 minute time frame, I'll give a quick example. We have this candlestick right here, right? I see that this is the last candle before market close. Don't mind my line. This is the last candle before market close, and it pushed all the way down to 185. And you can see we had a candle wick hit 185 before. Once we broke through it, we made a big move up. So what this is telling me is that come Monday, now I don't know where market is going to open, correct? But come Monday, I'm going to be paying attention to this 185 level because we got this big candle wick that sellers tried to push it to, but the buyers pushed it right back up and we closed at 187. That's a $2 move. So, like I said, this is going to be a big level for me come Monday. All right, so now that we understand the candle wick and how it opens and closes, let's talk about why they're useful. So these are useful because it shows you who's in control and it can show you the market trend or signs of reversal. So back to this example, right? I see that I see that the buyers are in control on this candle. Why? Because sellers got it all the way down to 185, but before this candle closed, the buyers pushed it right back up for a $2 move into 187, which is a really big move. Um, and as I said, you can see the bigger the candle, the bigger the candlestick is, the more volume coming in. So these big blue candlesticks are showing strong buying power. You see, we then get a little bit of selling pressure coming in, but the buyers kind of took it back over. And this was just a choppy day. So that's why it's just moving up, moving down, moving up. But you can see at the start of the market, the buyers had complete control. They weren't able to push it much higher than 188. We weren't able to break that level. But you see that the buyers still pretty much had control, especially seeing this candlestick at the end. So, and this is kind of how I do my pre-charting before the new day comes, or um, the market opens, or just whatever it is. So come Monday, I'll be looking for us to break through this 188 level and hold it. If we break through this 188 level, I think we can continue seeing uptrend. Um, if we lose this 185 level right here that I talked about, I think we'll see downtrend. Let's delete this. I think we'll see downtrend into, let's see. And this is just kind of how I get my trade ideas sometimes. We could see downtrend all the way to here, which, oops, rolling. Here would be a level, our first level, and then if we lose this, it just be lights out and we kind of go into gap fill mode. But you want to start on your bigger time frames and scale down when you're looking at candlesticks and you're trying to get ideas. If you're going to go down to the 5 minute, you want to start, on the 4 hour, move down to the hour, move down to the 15, and then get to the 5 for your trade ideas. All right, and so it's the same thing with a bearish candle. We'll just use this example here. So you can see that the candle opened at $7, right? It opened at $7, and at some point it got up to $10. Okay, sellers were in control, and they pushed price down as low as $3. And on this candle, let's say this was a 5 minute candle. By the time that 5 minutes was up, we closed at $5. So this candle got as high as $10, but it dropped all the way down to $3, or it could have opened at 7. It could have went straight down to 3 and then got up as high as 10, but it closed at 5. So this candle is showing you that the sellers were in control by the time this candle ended. Why? Because price opened at $7, right? But once it closed at 5. All right, so next we have candlestick patterns. These can help you predict or give you a reference as to what the market's gonna do. Now, candlestick patterns aren't always 100% accurate. Nothing's gonna be 100% accurate in trading. You just want other things to be reference points with what you have already. So, for example, key levels should be something that you're looking at. EMA should be something that you're looking at. Overall market trend. Then you can look at candlesticks. Then you can look at the volume coming in. There's many things that has to go with another thing for it to make a good trade. All right, so bearish pin bar. Um, we have price going up to a certain point. Let's do this. We have price going up to a certain point, and then sellers come in control and they push price all the way back down, and they close price pretty much where it opened. That's why this red box is so small. Same thing with a bullish pin bar. Sellers push the price down, Buyers bought it back up and they kind of closed where it opened, but they still closed above where it opened. So that's why it's a small green box. So now looking at it on the charts. So this technically, this candlestick is technically, I'm sorry for the bad lines. This is technically um, a bullish pin bar. Was really a bullish hammer, but it's a bullish pin bar. Why? Because buyers, sellers pushed the price down all the way down to 185, and buyers bought it back up, and they kind of closed it where it opened. Now I know it's black, showing that the bears, won this candle, but seeing that sellers buyers were able to push this price back up on the $2 move shows a lot of buying strength. But you could really look at it either way. You could see that sellers are trying to hit this level. So you could, like I said, 185 would be a level to watch, um, come Monday, because sellers tested this level on the last candle, but they just weren't able to do it. So they might be trying to test it on Monday. All right, so here's an example of a bullish pin bar. So you can see that at one point sellers tried to get price down to 130.17, which they did, and the buyers pushed it right back up, and they closed pretty much where it opened. And you see later on in this trend, it ended up going up in the buyer's favor, right? The market ended up going up. So you can use candlesticks as a representation. You see, it didn't happen right away, but later on in that trend, it happened. See if we can find another one on the same chart. Um, let's see. And this is on the 5 minute um, time frame. So these representations aren't as strong as they would be on a higher time frame. Uh, let's see. You see one here, but it ended up going down. So that's why I'm saying you can't just go off of candlesticks only. Um, you have to have other things that work. Look like I lost that trade. Um, okay, so here's one right here. So you see that sellers got priced down to 131, let's say 50. Buyers pushed it right back up, and we kind of closed where we opened, and we ended up seeing some more uptrend. So that's bullish and bearish pin bars. They're pretty much the same thing as hanging mans and shooting stars, uh, or hammers. They're little hammers are a little more stronger than pin bars, but they're pretty much all the same thing. Then we have doji candlesticks. Dojis can show a sign of reversals or indecisiveness. So you have a regular doji, then you have a dragonfly doji, then you have a gravestone doji, and a long-legged doji. A long-legged doji and a regular doji are pretty much the same things. So these are the same things pretty much. Um, the long-legged doji is just showing more selling and buying. A regular doji is just, pretty much simple. I don't even know if that's the right word to use, but moderate buying and selling. So let's see if we can find some dojis. All right, so here we pretty much have a doji. I mean, it closed red, but So this is showing some indecisiveness or reversal. Remember, it can show indecisiveness or reversal. This doji stick happened, and we ended up going down after we made a big move up. We had a doji pop up, and we started to make a big move down. So you can use a doji as an indicator along with your other indicators that buyers are getting weak here at this level, right? So we're kind of sitting at this 625 level, and I see that buyers are getting weaker up here, and then I get a doji, and we test that 625 level again, but we never break past it. So this could be on this candle, really this candle right here. You'd be wanting to get in on your trade, and now you just take it to the downside. You'd be getting in for puts, I'm sorry. Here's another doji. You see we made a move down, and then a doji popped up. Doji popped up. We were pretty much testing the 619 level. Sellers wasn't strong enough to break it. And we got a doji and we made a move up. Here's a long leg doji. Nothing really happened off of this. Well, we got a little bit of a move up still, but not too much happened off that doji. Let's see if we can find some gravestone. Here's another doji right here. Like I said, so it's just showing indecisiveness in the market. You can't tell if buyers or sellers are in control. You see buyers had it. We tried to push up, but they brought it back down pretty much to close. We tried to push down. They pretty much brought it back to where it opened. So it's just showing indecisiveness, and you could have caught a quick move off of that. I wouldn't recommend trying to trade off just dojis because you'd be stressing yourself, but the possibility is there. You can see here we're going up. We got a doji, started going down, and it's so many more. Other than that, we have Dragonfly Doji and Gravestone Doji. Like I said, those are pretty much the same thing. All the dojis are pretty much the same thing. A doji is a doji. It's just a Dragonfly Doji will show you that sellers are trying to step in, but buyers pushed it back up, and vice versa with a Gravestone Doji. Buyers are trying to come in, but sellers pushed it back down. Then we have the engulfing pattern. So on a bullish engulfing, the sellers were in control at one point, and then we got a big green candle that's pretty much engulfing the red candle. So I just think about it as the candle eating the previous candle. So on the bullish engulfing, this green candle is eating this red candle. On the bearish engulfing, this red candle is eating this green candle. So engulfing patterns can be good to show you strong reversals. So right here you see that this candle pretty much engulfed this candle and we made a move down. All right, so you can also see this bearish candle engulfed this candle. We made a move down. And I mean, there's so many more examples. I don't know if I'll be able to find them all, but let's see. Let's see. But yeah, like I said, it's just another way to get a trade idea or to kind of understand where the market is going. You don't want to only be trading off of this. You want other reference points as well, but it can be a great help to your trade idea if you see like a bearish engulfing or whatever it is, like this one, for example. It's a big candle. We made some moves down. These are good moves down. Um, Bullish engulfing, we kind of made a move up. I think that was earnings, yeah. So this is earnings. So yeah, candlesticks, look, engulfed it, kind of made a move down. It might not seem like a big move, but intraday, this could be a pretty good move. You know, you could make 10-20% off of a scalp on this move down. But like I said, you want to be trading off key levels as well. You don't want to just be going off candlesticks. You want to make sure you have your key levels, and the candlesticks will just help into your bias. So that's pretty much it with our candlesticks. The next video I'll be making, I'll be going over support and resistance, which also help out with candlesticks. I haven't been active as much, but I'm gonna start making these videos some more, and I'm gonna start pushing them out. That way I can help everybody get the basics to their trading journey if they're interested. Um, and we can all start making some money. So, like I said, I'll get that support and resistance video out pretty soon. And from there, we'll actually start talking about options trading and talking about how to trade options.